The recession that wasn't may be the best way to describe 2023, in addition to the year's strong market performance. So while we now believe the Fed will deliver a soft landing, we ask how far into that cycle are we now in the U.S.? And what about overseas, countries like Japan, for example? How are they positioned for profitability? And where in the world are the opportunities for investors? We're going to discuss that right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. Sorry, we're having a lot of fun here today. I'm really excited to welcome to the studio Nanette Jacobson, who is my guest for today, and we're going to talk globally about opportunities, which we do often enough here, but sometimes we sort of stay within one country or the other. But if you're thinking from a global perspective, as a strategist yourself, Nanette, where are we today? I mean, we talked about right in the open how we believe here at UBS that we are in a soft landing delivery from the Fed. We think the Fed will start, of course, cutting rates this year. When they will, perhaps may. What are your thoughts on all of this? There's so much going on.
We agree. I think that we are in for a soft landing. But the question is, what does a soft landing really look like? Could it be 0% growth? And how does that feel? Could it actually be stronger growth and inflation fears get reignited? So I think maybe the environment is not quite as benign as the consensus believes. But base case is that we're not going to be in recession and inflation is coming down. So this kind of beautiful scenario for risk assets. So we're positively disposed toward equities. The problem is that a lot's priced in already.
Exactly, and that's what I was going to say. It's funny, we're sitting here a year ago right now, we were only asking the question, are we going to go into a recession? And all year we kept saying, not sure, but looks like maybe, and then it was slowing down. Now we're like, okay, that's off the table. Especially, I mean, look at the performance we saw last year in equities. Where do you think we are, right? Or I should maybe say, what's your position on equities today globally? Are we going to see growth? Is it going to be slower growth?
Yeah.
Are there still opportunities? Because last year's performance, especially in the U.S., amazing to see what happened in the S&P 500.
Yes. So, and of course, a lot of that performance came just in the fourth quarter.
Let's
remember that.
That's right.
And of course, in the U.S. market, it's such a narrow market, and so most of the gains, something like 65% of the S&P gains, came from 7 stocks. So a lot
the
of interest
Magnificent Seven.
Yes.
Yeah.
Underneath the hood, there's a lot going on. But where I am is, I do think the U.S. economy is so important to the global economy. The consumer is strong. Unemployment is very low. The service sector is doing really well. The economy's in better balance. So the risk backdrop is pretty good.
Yeah. One of the things you wrote about in a recent report was talking about how Japan remains your top developed equity market. That's why I wanted to highlight that specifically, as you did. Talk about the reasonings behind that particular conviction that you have.
Yes, sure. So last year, Japan in local currency was the best performing equity market. And part of that is that whereas every other economy was fighting inflation, and inflation is really pinching pocketbooks and causing pain for corporations with their input prices, in Japan, inflation's a good thing. Inflation is a good thing for Japan because companies have pricing power. Wages are going up. And remember that Japan and the equity market was really given up for dead for 2 decades.
It sure was.
Right? I mean, no one has paid attention to Japanese equities. And now what we're seeing is a mindset change really spurred on by corporate governance, where companies are thinking more about shareholders and returning capital to shareholders.
So in the sense of so we see, obviously you see opportunities in Japan. For other investors out there, where do you see the opportunities where maybe there is a little less risk involved right now?
Less risk than Japan?
Well, less risk in general. Like if we're looking overall at the picture that we're ahead of us, like even
Yes.
say the short term next 12 months, given the backdrop of we think the Fed's going to start cutting rates. As you talked about with Japan, there's opportunities there. But are there other risky places where you might say, I would avoid that right now?
Well, I think, the areas that I'm interested in are a little bit different. There other ways to increase risk. Maybe if you don't want to look at the U.S. market, would be small cap. If we happen to be in a phase of the cycle, and by the way, nobody knows really whether we're at late cycle or early cycle or mid cycle.
Right, that's the question.
That is the question.
That's
Where
right.
are we? But if we're actually reaccelerating, then small cap would be a good place.
Right. I mean, look at the Russell, how it's underperformed the S&P from small caps to large caps. Quite a disparity. So there is upside there.
Yes. Yeah, we think so. And we certainly think that as a market that's less efficient than large cap stocks, that there are certainly opportunities to pick winners and losers.
Right.
And these companies are much less covered than the top companies in the S&P.
Right, which makes a lot of sense. And that's similar to our view here as well, our house view for CIO. So short term, long term, let's actually go 12 months and beyond. What does it look like out there right now for investors, just globally, when you're sitting there with your global strategist hat on? What are you seeing?
Yeah, I think that a lot of the rules of thumb that we have come to embrace may need to be reconsidered. I think fixed income, very interesting place. We're at higher yields, and we do like duration right now at the 10-year yields where we are. But will it be as much of a diversifier as it has in the past? And I think there are other asset classes and other ways to think about allocating your portfolio. It might be in private assets, could be other alternatives, but also, could there be more dispersion in the mega cap tech stocks?
Right.
And there's some rotation into value or into small caps. So I just think diversification really becomes the watchword for every portfolio, and realizing that you can't just be invested in 7 stocks.
That's right. Yeah, exactly. That's a big word for us as well, diversification. And also that sort of breaking down the myth of the traditional 60-40 portfolio. I mean, we even think we should have more like a 40-30-30, where maybe 30% is, like you said, privates, private credit, private equity, some type of alternative, which is a really interesting place to think about when you're building a portfolio as a client, and especially our advisors who watch our shows as well, to think about how can I be then looking at different ways to diversify my clients' portfolios here. So it's interesting that you also, not interesting, but it makes sense that you would have that same viewpoint.
Yeah, and we even think that if you think about inflation, the longer term view that I have is that inflation is going to be a little stickier, a little higher than we're used to in the past 10 years. So what kind of assets do you have that are more inflation sensitive? Now, you may not be able to own commodities, but maybe you can own energy companies or maybe utilities. By the way, both sectors are in the value space right now because they're so cheap. So I think that there are, creatively you can create a portfolio which is diversified and also accounts for some of the risks that I'm looking at the next 5-10 years. Right,
and with, just really quickly, obviously there are a lot of geopolitical risks out there on a consistent basis. How do you hedge against some of that?
Yeah, the old-fashioned gold.
Yeah. Go right back to the bullion. Yeah.
We're getting back to basics because gold, works in geopolitical stress. It also works, if the dollar, because of de-dollarization, gold would work in that environment. And real yields are coming down. So several reasons why gold might work in a portfolio.
When all else fails, hedge with gold.
Yes.
I mean, certainly in certain situations. Anyway, Nanette, thank you so much. I feel like we could talk for another 10 minutes here. Thank you for coming by. Great to have you here.
It's my pleasure. Thank
you so much. Good to see you, Nanette Jacobson. Thank you. And for more information from our CIO and any of the views from our great partners, make sure you're visiting our website at ubs.com/views. Plus, we're on all the social media channels, including at UBS Trending, which is our dedicated Instagram channel for UBS Studios. So make sure you're following us there. And if you have any questions about what Nanette and I spoke about today, make sure you're having a conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great day. And remember to keep your eyes on what's trending, everybody. We'll see you soon.